Stop right now. If you're about to buy silver, close that browser tab. If you're heading to your coin shop, turn around. If you're on the phone with a dealer, tell them you'll call back. Because what I'm about to show you could save you hundreds of dollars, or make you hundreds of dollars, depending on what you do in the next 72 hours. I'm not saying silver is a bad investment. It's not. And I'm not saying sell your stack. That would be crazy. But there's a right way and a wrong way to buy silver this week. And if you do it wrong, you're leaving serious money on the table. Welcome back to Simple Life 1.0. Today, I'm exposing something nobody else is talking about. Not the dealers, not the analysts, not the financial media. A 72-hour window is opening that creates both opportunity and danger. Most people won't know until it's too late. Give me your attention for the next few minutes, and I'll show you exactly what's happening and what to do about it. Let's get into it. 3 days ago, I got a call from a dealer I've known for over a decade. Let's call him Mike. He runs a mid-sized precious metals operation, moving hundreds of thousands of ounces a year. Mike was nervous. Not excited nervous, scared nervous. And he said something that changed everything I thought I knew about buying silver right now. Here's what he told me, paraphrased. The major wholesalers are about to make a move. In the next 72 hours, premiums are going to shift dramatically. Some products will spike, some will drop. If you don't understand what's happening, you'll get crushed on timing. Then he told me something shocking. He told me not to buy from him this week. A dealer telling a customer to wait. That got my attention. So I started digging. I called 3 other dealers. 2 confirmed exactly what Mike said. The third admitted things were getting weird with supply. Then I pulled the data, COMEX reports, delivery schedules, mint production numbers, and I found a pattern I've seen 3 times before in the last 5 years. Every single time this pattern appeared, the same thing happened. A massive premium reorganization. Let me explain. In silver, there are 2 prices. The spot price and the premium, which is the extra you pay for physical metal. Generic rounds might carry $3 premiums. Silver Eagles might carry $12 premiums. Normally, these premiums are stable, but 3 times in the last 5 years, I've seen what I call a premium inversion event. The normal hierarchy gets scrambled. Products that normally cost more become available at discounts, and products that normally cost less become impossible to find. When this happens, there's a window of about 72 to 96 hours where smart buyers can grab premium products at discount prices, while uninformed buyers massively overpay for the wrong products. I believe we're about to see the 4th one, and the window opens in approximately 72 hours. Before I go further, let me be straight with you. There's a lot of noise in the silver space. That's not what Simple Life 1.0 is about. I've been covering precious metals for years because I believe understanding hard assets is one of the most important things you can do for your family. And the best opportunities come quietly when nobody's paying attention. Here's how I verified Mike's information. Because you shouldn't just trust some guy got a phone call. First, I pulled COMEX delivery data. It's public. Delivery requests for silver are running 47% above the 5-year average this month. That's significant. Second, I checked inventory levels. Registered silver at COMEX is at levels we haven't seen since 2019. Third, I contacted 3 dealers anonymously, pretending to be a first-time buyer. 2 said certain products are unavailable until mid-next month. The third said they are expecting a E-major shipment in 72 to 96 hours that will change their pricing. 3 independent data points, all pointing to the same conclusion: something is shifting. And that shift is imminent. I'm not saying silver will crash or claiming conspiracy. I'm saying the mechanics of how silver moves through the supply chain are about to create a temporary dislocation, a mismatch between supply and demand. There's a dislocation happening in the silver market right now that creates a 72-hour window where normal pricing rules just don't apply. If you understand the mechanics, you can exploit this window. If you don't, the window exploits you. Let me show you what's happening. To understand the next 72 hours, you need to know how silver actually gets to you. Most people think it's simple. A mine digs ore, a refiner makes bars, a dealer sells them to you, done. But that's not how it works at all. The silver supply chain is a complex web with timing mismatches at every single point. Those mismatches create opportunities for people who understand them and traps for people who don't. Let's walk through it. Stage 1 is mine production. About 70% of silver is a byproduct of mining other metals like copper and lead. This means silver supply is heavily influenced by the economics of other metals. Stage 2 is refining. The ore goes to major refiners who produce those big 1,000-ounce bars for the wholesale market. The key point here is there's a 2 to 4 week lag between mining and the refined bars. Refiners can't just flip a switch and increase output. Stage 3 is wholesaling. These 1,000-ounce bars go to wholesalers who buy from refiners and sell to dealers. They set the prices dealers pay. Then, stage 4 is the dealers, your online stores and local coin shops. They buy from wholesalers and sell to you at a higher price. That's their margin. Finally, stage 5 is you. You see the spot price, add the premium, and buy. Simple, right? Wrong. The price you pay is determined by everything in those first 4 stages. Any disruption changes the premiums, sometimes dramatically. And that disruption is happening right now. 3 weeks ago, one of the largest primary silver mines in Mexico announced a temporary suspension, a labor dispute. It only lasted 11 days. During that time, about 2.3 million ounces of silver that should have entered the supply chain didn't. Now, that might sound small, but markets don't price total supply. They price the marginal, incremental ounce. Think of it like a highway. If 1,000 cars per hour can use it, and 999 want to, traffic flows smoothly. But if 1,001 cars want to use it, traffic doesn't just slow down a little, it grinds to a halt. That tiny bit of excess demand creates massive dysfunction. That's what's happening in silver. The 2.3 million missing ounces would normally be hitting the wholesale market this week, these next 72 hours. But it's not there. Wholesalers know this. They've already reduced allocations to dealers, and dealers are about to discover their expected shipments just aren't coming. When that happens, premiums spike, and that's the window. The 72 hours between when dealers realize their supply is cut and when they can secure an alternative. It's chaos. Some products become unavailable. Others, the ones dealers are overstocked on, might even get discounted as they try to free up cash. If you know what's happening, you can take advantage. If you don't, you'll overpay. But supply disruption is only half the picture. At the exact same time, demand is spiking. About 60% of silver demand is industrial, electronics, solar panels. Solar alone is projected to use 30 million more ounces this year than last. Industrial buyers need the metal no matter the premium. Then there's investment demand. That's you. People are protecting their wealth from inflation and uncertainty. We're also approaching a major psychological price level. When silver breaks it, a wave of new buying will hit. And finally, institutional demand is waking up. Big money, family offices, even central banks are looking at the gold to silver ratio and seeing that silver is deeply undervalued. For the first time, they're getting interested. So you have a supply shock hitting at the exact same moment demand is surging from 3 different directions. The next 72 hours will be critical. Let's talk about the silver market, but not in the way you usually hear. We're going to dive into what happens behind the scenes when the market gets chaotic, and how a 72-hour window can make all the difference. When big institutions decide to buy silver, they don't just click buy for a few $1,000s. They call wholesalers and ask for hundreds of thousands of ounces at a time. These are the calls that move markets. Now imagine 3 of these major demand sources all hitting the market in the same 72-hour period. You've got spiking demand and constrained supply. Now the collision happens at the wholesale level, which is exactly where the premiums you pay get set. This kicks off 3 powerful feedback loops that most people never see. First, the dealer scramble. Dealers realize they're low on inventory, so they all call their wholesalers at the same time for the same products. It's like a traffic jam. Wholesalers prioritize their biggest clients, leaving smaller dealers on a wait list. Those waitlisted dealers then have to raise their premiums to cover the uncertainty. Second, consumer panic. When smart buyers see premiums rising, they don't wait. They see it as a signal that supply is getting tight and it might get worse. So they buy more, and they buy now, fueled by the fear of missing out. This extra demand hits the market right when supply is at its lowest, pushing premiums even higher and triggering more panic buying. Third, media amplification. Spiking premiums become a hot story. You see it on YouTube, on Twitter, and sometimes even in the mainstream news. This brings in a whole new wave of buyers who weren't even paying attention before. This wave usually hits about 48 to 72 hours after the initial disruption, pouring fuel on an already raging fire. You see how it works? A supply disruption starts a dealer scramble, which raises premiums. Rising premiums create consumer panic, which is then amplified by the media, creating a second, even bigger wave of demand. It's a cycle that spins faster and faster. That initial 72-hour window is your chance to act before the real chaos kicks in. I've seen this exact pattern play out 3 times. In March 2020, during the COVID panic, supply chains collapsed. For a brief 72-hour window, you could still buy silver at old prices. Then, boom, premiums shot up. Silver Eagles were selling for $15 over the spot price. Those who acted early won big. It happened again in October 2021 with a quiet silver squeeze second wave, and in March 2023 with the banking crisis. Each time the story was the same: a short window of opportunity followed by spiking premiums and intense competition. Acting within that first 72 hours means you're buying ahead of the feedback loops. If you wait, you're buying at peak chaos. Understanding these dynamics is key to navigating the precious metals market. So what's the lesson from all this? The 72-hour window is very real. Information flows through markets at different speeds. Insiders know first. Sophisticated observers come second. The mainstream media is third, and the general public is last. You're in that second group. You're not an insider, but you're not waiting for the evening news either. You have a window. Maybe it's 72 hours, maybe it's 96. What will you do with it? Now, I know what some of you are thinking. This sounds like fear-mongering for clicks. And that's fair. There's a lot of that in the silver space. But notice what I'm not claiming. I'm not saying silver is going to $500 next week. I'm not pushing any secret conspiracy theories or predicting a financial collapse. I'm making a modest mechanical claim. A supply disruption is flowing through the distribution chain and will likely hit retail in about 72 hours, causing premiums to shift. This is just logistics, not wild speculation. You might also ask, why should I trust your dealer friend Mike? Also a fair question. Mike could be wrong or even lying. That's why I verified what he told me with data from COMEX reports, checked with other dealers, and looked at historical patterns. Everything corroborates his story. And here's the thing. Mike actually told me not to buy from him right now. If he wanted to manipulate me, he'd be creating urgency to get my order. Telling someone to wait is not how a manipulator behaves. You've been patient, so here's exactly what I'm doing in the next 72 hours. Step 1, an inventory audit. Before buying anything new, you have to know what you already have. Go to your safe, count it, catalog it. You can't optimize your buying if you don't know your current position. Step 2 is creating a watch list. Make a specific list. Which dealer, which product, what quantity, and the maximum premium you're willing to pay. A written plan prevents emotional decisions. Personally, my watch list includes 1 ounce generic rounds from reputable mints, some constitutional silver if premiums become reasonable, and at least one 100-ounce bar. Step 3 is dealer monitoring. I check prices on at least 3 dealers every morning and evening, noting premiums, availability, and shipping times. I'm looking for 2 signals. Signal A is a premium drop on a normally high premium product. That means a dealer is overstocked and needs to move inventory. That's your opportunity. Signal B is a premium spike on a normally low premium product. That means supply is getting tight, and you should buy immediately before it gets worse. Step 4, set price alerts. Most dealers offer this service. Set alerts on your watch list items at your maximum acceptable premium. This way, you don't have to check constantly. Step 5 is to prepare your funds. Whatever you're planning to spend, have it ready. Cash available, credit limit clear. When this window opens, speed matters. Good deals sell out in hours. My final point is to ignore the noise. The next 72 hours will be filled with YouTubers screaming that silver is going to the moon, while others will be yelling about a crash. Ignore all of it. You have a plan, just execute the plan. Thanks for watching, and don't forget to follow for more updates. Let's break it down. A major supply disruption is hitting the silver market right now. A Mexican mine was offline, so metal that should be available this week just isn't there. At the same time, demand is spiking from industrial users, investors, and big institutions. This is a classic setup for price action. So what's the plan? You could do nothing and hope for the best. You could panic buy and likely overpay. Or you can strategically execute. This is the hardest option, but it gets the best results. I've got my watch list, my price targets, and my funds ready. For the next 72 hours, I'm watching prices closely. When I see an opportunity that matches my plan, I'll act. No panic, no paralysis. This window is opening now. Use it wisely. If this helps, subscribe and hit the bell. I'll post a follow-up showing how it all played out.